Have you ever looked at a company's, financial report and just thought, there's got to be a simpler way to figure out what's really going on here? Huh. Well, you're definitely in the right place. Welcome to our deep dive into the Q1 FY26 financial results of Axis Bank. They're one of India's leading private sector banks, and we're looking at the quarter that just ended on June 30th, 2025. Our mission today, simple. We want to unpack the key figures for you, understand what's driving their performance, and pull out the most surprising, maybe significant bits of info. And we'll do it without getting totally bogged down in jargon. We're going to touch on everything. Core banking numbers, yeah, but also their digital stuff, their innovations, even what they're doing for society. And we have this little puzzle to solve. Axis Bank's operational profits, they're looking great, soaring really, but their net profit actually dipped. So we're going to try to unravel that mystery as we go, peel back the layers.
That's absolutely the core question, isn't it? Okay, let's start right at the top. Those headline numbers. Axis Bank's standalone operating profit for this quarter, Q1 FY26, it stood at 11,515 crores. Pretty robust. What jumps out immediately is just how strong that operational performance is. A solid 14% increase compared to last year, and even 7% up for the previous quarter.
Okay, so operationally, things are looking really good, excellent even. But here's that puzzle we mentioned right at the start. The standalone net profit for the quarter, it actually fell, down 4% year over year, landing at 5,806 crores. So strong operations, yeah, but a dip in the final bottom line. That contrast is, well, it's intriguing.
It really is. And it definitely makes you pause if you're just glancing at the headlines. What's also clear, though, from just the overall snapshot, is the sheer scale we're talking about here.
Yeah.
Their consolidated return on assets, the ROA, came in at 1.51%. And the consolidated return on equity, ROE, was 13.57%. Plus, the bank's whole balance sheet came bigger, grew 9% compared to last year, reaching a staggering 16,003,308 crores as of June 30th.
Right. So what does this tell you, our listener, about Axis Bank? I mean, these aren't just abstract figures. They signify a truly massive financial institution, huge reach, that strong operating profit growth. It signals healthy core business activity, definitely. And the expanding balance sheet shows they're still growing their underlying business. So broadly, it's a picture of, immense scale and real operational strength. Even with that net profit dip, we need to explain.
Exactly. Now let's dig into what's really driving these figures, especially, how they're making money and managing their costs. Their net interest income, the NII, that's basically the profit from their main lending business.
Yeah.
It was 13,560 crores. Now, this showed just a modest 1% increase year over year, but interestingly, it was actually down 2% compared to the previous quarter. Their net interest margin, the NIM, for this quarter landed at 3.80%.
Okay, 3.80%. But here's where the story gets, really fascinating. It's this category called other income. This is truly where their growth engine just roared. It saw a huge jump, up 25% year over year and 7% quarter on quarter, hitting 7,258 crores. That's a massive boost, right? It's almost half the size of their NII. And if you break that down, their fee income grew a solid 10% year over year to 5,746 crores. What's really impressive here is that retail fees made up, 70% of that total and grew 9% year over year. Even corporate and commercial banking fees saw pretty healthy growth, 13% year over year. And get this, fees from third-party products surged by 30% year over year.
Absolutely. And let's not forget, they also had a very impressive trading income gain, 1,420 crores just for this quarter. This big growth in other income, it's not just a number. It really shows a strategic shift, I think. In an environment where, interest margins can get squeezed, Axis Bank seems to be building a more resilient income stream. Diversifying away from just relying on interest. This diversification, especially with retail fees driving so much of it, suggests they're kind of anticipating market shifts, positioning themselves for stability.
That makes a lot of sense. Yeah, not putting all their eggs in one basket. Yeah. And on the other side, the expenses. Operating expenses were actually down 5% compared to last quarter and only grew 2% year over year. The bank calls this operating jaws positive, which, fancy term, but it basically means their income is growing faster than their costs. That's always a good sign for efficiency. Their cost to assets ratio also dropped to 2.41%. That's down 13 basis points, 0.13% year over year. Shows real discipline in managing costs while growing income.
Okay, so we've got the big picture financials, how they're managing income and costs. But, at its heart, a bank runs on two things: the money it takes in deposits and the money it lends out. Let's dig into those core engines now. Deposits first. Total deposits grew steadily, up 9% year over year if you look at month-end balances, and 8% year over year based on the quarterly average. That's pretty critical for their funding stability.
And if we look closer at the types of deposits, term deposits showed really strong growth, up 12% year over year. current account deposits. They grew 9% year over year on the month-end basis, 4% on the quarterly average. Savings account deposits grew a bit slower, 3% year over year month-end, 1% quarterly average. Their SISA ratio, that's current account savings account, it stood at 40% month-end and 38% quarterly average. Generally, a higher SISA ratio is good. Means lower cost funds for the bank.
Right, cheaper funding. Okay, now let's flip to the loan book. This is really where banks make their money, right? The bank's advances loans, they grew 8% year over year and 2% just in the last quarter, reaching 10,059,724 crores. So still plenty of demand for credit, clearly. Looking at the different segments, retail loans grew 6% year over year. They make up 59% of all their loans, and apparently about 72% of those are secured. That sounds pretty good for managing risk, but what about the overall quality of this growth? Are they lending in the right area?
That's a critical question. Always is. And what's fascinating here is the varied growth across different business segments. It's not uniform. The small business banking book, that grew 15% year over year. SME loans, up 16%, and mid-corporate loans surged by a really impressive 24% year over year. The main corporate loan book also grew 9% year over year. And here's a key detail. Roughly 90% of that corporate book is rated A or above. That signifies very high credit quality. So it isn't just growth for growth's sake. It looks like a strategic focus on diversifying that growth while keeping a strong handle on the risk profile.
That's definitely the goal, isn't it? Grow, but grow safely. But how tough is it really for a bank as big as Axis to truly diversify its lending and maintain that high quality, especially with, potential economic challenges in some areas? It seems clear they're prioritizing quality growth, not just any growth. Oh, and briefly on their investments. Book value was 3,060,641 crores, and 72% is in something called held to maturity, or HTM. What does that signal?
That's a great point about the challenge. It requires a really robust risk assessment framework and constant active management, which, based on these numbers, they seem to have. As for the held to maturity, or HTM, think of it like a long-term bond that the bank basically plans to hold right until it matures. Payday. This is actually a crucial indicator of stability. It means that portion of their portfolio isn't really subject to the daily ups and downs of the market. It signals a pretty conservative, predictable strategy for a big chunk of their investments. It tells you, the listener, that they're prioritizing loan quality and stable investment returns, which is key for stability, especially now.
Okay, that definitely helps explain their approach to long-term stability. Now, let's tackle risk head-on, asset quality. And let's finally address that net profit dip we flagged right at the beginning. The reported gross non-performing assets, NPAs, that ticked up, stood at 1.57%, up from 1.28% last quarter. And net NPA was more 1.45%, up from 1.33%. Provisions and contingencies for the quarter were 3,948 crores. So setting aside more money for potential bad loans.
Right. And this is exactly where that net profit dip we mentioned earlier comes into sharp focus. It's largely down to something they're calling the technical impact. Now, this refers to essentially the bank being prudent and applying very specific technical rules for recognizing when loans go bad slippages and when they get better upgrades. It's mainly related to specific types of lending like cash credit, overdrafts, and accounts settled in one go. So certain loans or accounts that have these specific internal rules for classification, this technical impact directly added 821 crores to those provisions we just mentioned, the ones hitting the profit and loss account. And it also accounted for 2,709 crores of gross slippages loans newly classified as NPAs.
Wow, okay. So this technical impact, it's a significant accounting thing. Not necessarily new loans going bad economically, but being reclassified technically. And it hit the net profit by 614 crores, shaved 15 basis points off the ROA, and 1.4% off the ROE. That's definitely a chunk. But, and this seems like the really crucial part that changes how you look at it at the bank, stresses that 80% of the specific contracts that slipped because of this technical impact and were still NPA on June 30th, they are fully secured.
Wow.
Which suggests the actual economic loss down the line should be minimal. They expect to get most of that money back eventually.
Exactly. This whole technical impact situation really highlights a critical lesson for anyone looking at these reports. Never just stop at the headline number. Digging deeper often reveals these nuances that can completely change the story. What might look like a red flag rising NPAs could actually be a sign of prudent accounting and careful risk management. It raises that important question, doesn't it? How do you tell the difference between real underlying credit quality getting worse and just a technical reclassification like this? It's about understanding the gap between reported numbers and the underlying economic reality. Nuance matters.
That's a really powerful takeaway. Understand the why behind the numbers. And despite these impacts, it's worth pointing out the bank is still very well capitalized. Their overall capital adequacy ratio is 16.85%, CET1 ratio 14.68%. Strong numbers. They also have extra cushions like 5,012 crores in other provisions, excess SLR of 96,608 crores, and their average liquidity coverage ratio was 119%. All of this basically points to strong financial resilience. They have plenty of buffers to absorb shocks. Okay, moving beyond just the raw numbers, let's talk about innovation. How are they actually reshaping the banking experience for people? Axis Bank is clearly pushing hard on the digital front. I mean, they're maintaining a market-leading position in UPI payments, the payer PSP space, holding around 32% market share both by value and volume. Wow, 32% market share in UPI, that's just immense. I'm actually curious, what does it take for a bank this big to not just compete, but stay so dominant in a space that changes? Like daily, digital payments move so fast.
Yeah. That UPI dominance is really a testament to their tech infrastructure. It has to be robust and a relentless focus on the user experience. It's not easy. It boils down to, seamless integration, reliability, and just constantly trying to stay ahead of the curve, anticipating what users need next. And it seems to be working for them. They saw an incredible 128% year-over-year growth in the total value of UPI transactions. Just huge numbers. They're also still one of the biggest players in the merchant acquiring business in India, holding about 19.7% market share for payment terminals. And their Axis mobile app, still highly rated, around 15 million people using it actively every month. That shows real customer engagement. They're keeping people on the platform.
And they're definitely not just sitting back, they're rolling out some really interesting industry first things. Think about this one. They introduced an in-app mobile OTP feature. It gets rid of the need for SMS OTPs. That should significantly cut down fraud risks, right? That feels like a genuine game changer, both for security and just convenience. Getting rid of that little wait for the SMS, it's a small thing, but it adds up. They also pioneered some B2B collections solution for a big Fortune 500 company using NBBL's Parrot Connect platform.
Indeed. I mean, I remember, maybe you do too, when getting an OTP felt like this mini ordeal waiting for that text message to arrive. Features like in-app OTP might seem small, but they smooth out those little friction points for millions of people every single day. It's a huge psychological win, I think. Builds convenience, builds trust. Plus, they launched new co-branded credit cards, one with Flipkart's Super.Money and RuPay. Another interesting one, a wearable payment solution with Boat, the electronics brand, and MasterCard, paying with your watch or band. In another industry first, they launched Gold on UPI, letting people presumably buy or transact with gold using UPI, integrating a very traditional asset with modern digital payments. That's clever. They're also seeing strong results from the account aggregator, or AA network. A 2.3x year-over-year growth in personal loans given out using AA data shows they're adopting these new frameworks quickly.
Right. The account aggregator framework is huge for streamlining loan applications. And let's not forget their wealth management arm. It's one of India's largest. Assets under management, AUM, of 6,629,216 crores. Their high-end service, Burgundy Private, saw its AUM increase 10% year-over-year. So for you, the listener, what does all this digital progress mean? Well, it means banking is getting more convenient, definitely more secure, and just more integrated into your daily life. Things like in-app, OTP, gold on UPI, they're not just buzzwords. They genuinely change how you interact with your money. Making things safer, smoother, it shows a bank that's not just reacting, but actively trying to shape the future of digital finance. Okay, finally, let's just zoom out a little bit, see how a bank's impact goes beyond just the financials. Let's look at their subsidiaries and their sort of broader social contributions. Their domestic subsidiaries seem to be doing steadily. Combined profit for Q1 FY26 was 451 crores. That's up 4% year-over-year. And they got a 47% return on their investments in these subsidiaries.
Yeah, and just to give you a couple of examples from that, Axis Finance, their lending arm, its profit after tax grew 23% year-over-year to 189 crores. Axis AMC, the asset management company, their PAT grew 12% year-over-year to 130 crores. Axis Securities, the brokerage, PAT stood at 89 crores. Axis Capital, the investment bank, PT was 38 crores, and they handled 6 ECM deals, equity capital market deals. And notably, their platform InvoiceSmart, which helps small businesses get paid faster, it's now facilitated financing for over, get this, 2,000 crores worth of MSME invoices. So this isn't just about the profits from subsidiaries, it shows how they're building out this whole financial ecosystem, supporting everything from investment banking to crucial small business financing.
That's fantastic to see. And it's also great that their commitment goes beyond just, the business side. The bank seems really committed to social and environmental stuff, ESG initiatives. They have partnerships like Project Naaman, which supports Army veterans, the Silver Lining Program, that's for senior citizens. They even signed an agreement with the Laksha Shooting Club to build a sports center.
And their ESG efforts, environmental, social, governance, they're getting noticed externally. They ranked second among Indian banks in the S&P ESG score for 2024, got an MSCI ESG AV rating in June 2025, and it's their 8th year in a row on the FTSE4Good index. Now, these aren't just fancy awards. These signal that sustainability is genuinely integrated into how they operate. It's not just an afterthought. They've also put serious money behind it. Sanctioned around 48,412 crores through wholesale banking to sectors that have positive social or environmental outcomes. And internally, they reported 27.7% female representation in their workforce. Plus, they've planted 3.2 million saplings, working towards creating a carbon sink.
This really does highlight how a bank's performance isn't just about the profit numbers, is it? Their active involvement in ESG, supporting different groups in society, it demonstrates a much broader impact on the economy, sure, but also on the community's well-being. It feels like building a sustainable business that also tries to contribute positively, creating a different kind of long-term value, perhaps. So, okay, we've covered a pretty comprehensive picture of Axis Bank's Q1 FY26 performance. We think we unraveled that initial mystery about the net profit dip, right? Explained by the technical impact. We looked at their strong operating profit, their diversifying income streams, their steady deposit and loan growth, that unique technical impact on asset quality, and their really impressive digital push and commitment to sustainability. Quite a lot to unpack.
Absolutely. And so, thinking about all this, what does it mean for you, the listener? Maybe consider how these rapid digital changes, these strategic partnerships we're seeing in banking, especially things like Gold on UPI or the account aggregator network, how they're fundamentally reshaping the way we all interact with our money, with financial services in the years ahead.
Yeah, are we kind of on the cusp of a totally new banking paradigm, where physical branches matter less and less, and everything from buying gold to getting a personal loan just becomes seamless, instant, right there on your phone? It's definitely a provocative thought, isn't it? We really encourage you to continue your own deep dives into the financial landscape and into the fascinating future of banking.